Hi everyone, welcome back to Lyman Consulting's VC series, where we pull back the curtain in VC and understand how different investors really evaluate different deals and what they're seeing and what they're excited about. Today we're here with Ariel Sterman, a partner at Bessemer, and we're super excited to have him and hear all about what he's looking forward to in the ecosystem, what he's seeing.
Thanks for having me, Nina.
Thank you so much. So let's start out. Would love to hear if you could share more about your background, kind of tell us your story and how you got to where you are today.
For sure. So my story is, I don't think it's all that exciting, but I grew up in the United States. I lived in the US for about 23 years before making Aliyah, moving to Israel in 2018. So I went to undergraduate at New York University, studied finance and marketing. Most of my peers at the time were going into investment banking and consulting, the classic Manhattan route. Mm-hmm. And I knew two things. Number one, I knew I wanted to eventually live in Israel one day. And number two, I wanted to do something much more creative, much more entrepreneurial than, hardcore finance. So I was really lucky, thank God, to get a role right after school, joining a growth equity fund in New York called Stripes Group. And I was there for about 3 or 4 years before my wife and I decided to make the move here. And thankfully, I was able to get a great role entering the ecosystem as an associate at Bessemer Venture Partners here, joining my partners Adam and Amit on the ground and our amazing team. And I've been there ever since. It's been a fantastic journey so far.
Wow. So can you tell us how you started out there? Because everyone, I hear all the time, this person trying to break into VC, that person. And how does it actually, it actually work for you? So
again, I really think a lot of luck and timing was involved. When I was graduating undergrad, there were very few, first of all, VC-related clubs and entrepreneurial clubs. But even more so, there were very few entry-level jobs straight into the venture world. The role I was able to land at Stripes in growth equity was this really nice intersection of some level of financial quantitative analysis, while also leaning a bit more towards qualitative, growth-oriented companies, where it's not simply running a DCF or trying to financially arbitrage your way to a return, but it allowed you to kind of touch a bit more of that qualitative and entrepreneurial energy. And so I was able to start there as an analyst and kind of learn the tools of the trade of how to evaluate businesses that have over, $5, 10, $15 million of revenue and growing nicely. So there's still some meat on the bone to actually analyze. And then, when I was looking at the Israeli ecosystem, I understood it was pretty clear that the shift I would have to make was towards the early stage, thinking much more about seed and Series A. And actually, that was pretty difficult. I'd say that transition, whether it was the United States to Israel culturally, or at the same time, I also became a father this 2 months before I moved here. The harshest transition I've had to do is to go from growth stage to early stage, where all of a sudden metrics and KPIs took the backdrop. And the core focus was actually on entrepreneurs and people and much more psychologically oriented. And so I was able to get the role, but thankfully the most important thing that I had at Bessemer and that I continue to have is mentorship. And I think that a lot of people look at venture capital as sort of a place where operators go after they've made their exit, and now they can kind of invest and command respect of the entrepreneurs because they've been there, done that, and built those companies. But the Bessemer model, and what I've been able to learn and gather from my partners here on the ground, but also my partners across the globe, is much more of an apprenticeship model, which is teaching you the tricks of the trade of what it means to be a great venture capital investor, not just a one-off, lucky investment at the right place, right time, but to consistently deliver fantastic returns and fantastic investments over the course of a 15, 20, 30, even 40-year career for some of our partners. And so when I got here, I knew nothing about early stage investing. I'm looking at these teams and I'm saying, wait, so there's no KPIs, there's no revenue, there's no gross margins.
Evaluate.
What are the unit economics? What's the business model? And the reorientation I had to do was to really focus on the entrepreneurs and focus on who these people are, what markets they're going after, what are the various trends and evolutions that we're seeing in their given category. And then not necessarily relying on a gut feeling, but really emphasizing intuition and emphasizing your understanding of people at this, essential, beginning stage of their journey.
Yeah, amazing. I have tons of questions and can go down a lot of different areas of what you touched on. Maybe let's start out, if you can talk a bit more about Bessemer as a firm. What do you guys like to invest in? What are you guys seeing a lot?
It's an amazing topic to discuss because our firm is over 100-year history in terms of its roots. So we actually initially
very much considered a top tier VC in the ecosystem,
and continue to have been delivering on that for the last 40 plus years since we've kind of become an independent venture capital firm. But our roots actually go all the way back to the American railroad industry, which is really, really interesting. Wow. So there was an entrepreneur in the railroad industry, in the steel industry, named Henry Phipps. He made quite a bit of money with his partner Andrew Carnegie in U.S. Steel. And after their successful exits of their businesses, set aside money in a family trust. And that family trust was called the Bessemer Trust, which essentially is it was named for the scientist who enabled the entire steel and railroad industry. So really focused on technological innovation and scientific discovery. And his family, the Phipps family, basically were investing out of this family office, the Bessemer Trust, for several decades. And then in the 1980s, if I'm not mistaken, sort of Bessemer Venture Partners was sort of a spin out of that with the backing of this family, but really focused on cutting edge technological investments. So we've been doing this now for over 40 years. What makes us unique is that actually we have no particular founder. For a firm that's 100 years old, there is no one person or one CEO who calls the shots, right? And at this point, we're over 20 partners around the globe, 20 investment partners, I should say, who are all basically working out of the same pool of capital and making investments that each individual believes are going to make great returns for the firm. And so what you end up having is 20 different folks executing strategies of their own liking. So for example, some folks might be focused exclusively on the growth stage, and some might be focused on the early stage. Some might be only cybersecurity investors, and some might only be investing in fintech or in healthcare. And that allows us to execute in parallel multiple different strategies as a firm to hold each other accountable for the investments that we're making, because it's very clear who's making the ultimate decision for every single investment, which means sort of you eat what you kill, for lack of a better idiom. And so that's kind of the way that we're structured, which also allows us, very interestingly, to evolve with changes in the market environments. So when we see,
because you're not like pigeonholed to like one thesis per se.
Exactly. And one partner might say, you know what, I'm seeing this interesting thing happening over here, whether it's in the emergence of the cloud or the emergence of mobile or the emergence of gaming, and they'll go ahead and start making some investments. The firm as a whole will allow for that, right? And say, okay, great, you're doing this. This is new. This is novel, but that's how we built the platform. And then slowly that, or hopefully quickly, that experience, that knowledge gets shared across the platform. And now every partner can kind of be empowered with that baseline, experience that we're having across the firm to go make better investments learned from one another while maintaining the autonomy. And so that's kind of the way we've been structured. We've been investing out of our 12th fund over the last couple of years. Obviously, the last 2 or 3 years has seen a dramatic shift in what we're all investing into. AI, thankfully, we were relatively early backers of Anthropic and have exposure to some other fantastic AI-related companies, whether it's Perplexity, whether it's Waymo, or here in Israel, companies like Double AI, and some really exciting ones that we've been invested for a while that have this moment in time where they're relevant for the AI world, like with DriveNets. But what you see is these investments were all made by different partners. And that's one of the very unique things about Bessemer, which is that every single partner is basically making names for themselves under the umbrella of Bessemer Venture Partners.
For sure. So how about you? What are you focusing on?
So I've had the merit of the last 8 years of essentially learning under my partner, Adam Fisher, who's been in Israel, for over 25 years in the venture ecosystem, at Bessemer for nearly 20 years. And essentially, our mentorship model meant that I was taught the ropes of how to be, hopefully, a great early stage investor. And by early stage, I mean founding stage, seed stage entrepreneurs through, let's say, the Series B or so, or early growth investments. And so that's been my focus. It was more of a stage level in terms of like my thesis areas. Yeah. And within being a generalist investor, over the last 2 years since becoming a partner, really carving out my unique areas of focus. And so I'd say that's constantly evolving. Most recently, I'd say there's two main buckets. There's sort of the AI and data infrastructure landscape, where I've had a couple of investments historically and some quick exits, which were nice to have as like a junior partner.
Yeah.
And now thinking more and more about what I'd call deeper tech areas, whether that's the intersection of defense, robotics, energy, electricity, the areas where there's actually now a lot of noise around in the venture landscape.
Yeah.
In the last 15 years, we've sort of shied away from most investments in those areas, though we have sort of exceptions across the fund. But historically, where Bessemer has actually done quite well from our early days. And so we're seeing this shift back towards, more hardware, more deep tech oriented investments, things that power and enable the tech of the future, whether it's the data center technologies that's required, or the energy and electricity that's required, or sort of the AI brains that are going to sit on the drones and the robots and the edge devices that we're going to be having, hopefully proliferate around the world. And so those are the two main buckets, I'd say: AI infrastructure, data infrastructure, and that area of deep tech, which I won't define too exclusively, because every so often you'll come across just really, really interesting ideas.
Amazing. So can you, for the audience that's listening, a lot of founders, can you maybe take a step back and walk us through, let's say if a company is coming to you, what does that journey look like? Really, from like the areas of either introduction or outreach and what that could or should look like, all the way to a deal closing.
Yeah, it's, each process might look a little different, especially when you're trying to react quickly to the most interesting opportunities, or move very fast on areas where you have a pre-existing thesis and want to sort of pull the trigger on fast. On the other hand, sometimes you never even thought about a sector that founders are approaching you with, but you're just so compelled by the opportunity and by the people that all of a sudden, okay, I need to take time and understand the space, but wow, am I excited about this team. I'd say the most, to get very practical, I'd say, we have a portfolio, if you just take in the Israeli market, of at least 50 or so active investments here in Israel. And that means we have 50 entrepreneurial teams that are more or less well known in the ecosystem. And I'd say the best way to get in front of us, the most green light on an introduction, is if it comes through an entrepreneur that we work with, and that entrepreneur says, hey, I know this guy or this girl and they're fantastic and we think you should talk to them. That's probably the warmest type of introduction we can get. Obviously, our job as investors is also to proactively pursue opportunities and find them before others find them. And so being connected to the right pockets of folks, whether it's the right folks in the AI research world or in the defense world or in the data infrastructure world, where our scouring of the landscape will hopefully lead us to you.
Yeah.
But I'd say to get an inbound to us, a warm introduction through an entrepreneur that we've worked with. Actually, one of my favorites is when an entrepreneur that we said no to, right? Where we had a great meeting, maybe 2, maybe 3 meetings. We built a great relationship. Ultimately, we passed on the opportunity for one reason or another. When they send us their friends, I think, A, that's just awesome, because it means that we left on a very positive note, even if the answer was no in the end. But B, I think that really says something, where someone says to their friend, hey, Ariel and the Bessemer folks, they actually said no to me, but I think spending time with them is valuable.
Yeah.
And so I love those types of introductions as well. And then, of course, cold outreach if there's no other way. But this is such a small ecosystem that,
there should be some way that you can find someone.
And in the absence of that, and by the way, it doesn't need to be an entrepreneur. It could be someone that went to high school with somebody because they're from the same town up north, right? It could be so random, but it just shows that you have that scrappiness and resourcefulness that's incumbent upon you as a founder or entrepreneur.
And when an entrepreneur comes to you, what are the signals that you usually feel for? Like you mentioned, at an early stage, it's not necessarily so tangible of like these exact financial metrics that you can measure. It's more of the intangibles and the vision and the team. So I'm curious, like, what areas of that are you looking for?
Yeah. So let's take the earliest stage possible, right? 2 or 3 founders on a team showing up. Maybe they don't even have a pitch deck. And there's not really much to measure. So one of the main things is a team. I think that there are some fantastic solo entrepreneurs out there, but the journey of a startup and hopefully building a enduring long-term massive business is a long one and a relatively lonely one, or an absolutely lonely one. And doing that alone is not simple. And having all of the akhrayut, all of the responsibility and the pressures on one person, it's like a single point of failure. So we love teams. Teams of 2, teams of 3, often even teams of 4. We recently announced our investment in Zig, which is essentially the entire IronSource founding team going to do it again, right? Yeah. And so teams that know each other well. At the same time, it's really important is that a team is not just filled with bodies or profiles that you think check a box. There really needs to be cohesion. There really needs to be some level of mutual respect, with also some clear boundaries as well, where there is a clear CEO, clear CTO, maybe an additional chief product officer. Depends on how that sits. But having like a half-baked team just to have a third co-founder is less interesting to me than having just 2 or even just 1. And so they walk, they'll walk in the room, we'll sit down. It's very qualitative and it's very psychological. We like to talk inside our firm, or at least within our team in Israel, about the difference between founders and entrepreneurs. And I think that distinction is not really made often. Anyone can go ahead and found a company, right? Sure. I'm a serial founder. I've registered several businesses, some of which were not successful, some of which were. That's a sign of somebody who is a self-starter and self-motivated, right? And someone who believes that they can do something. But I think we're really looking for entrepreneurs. And so what are the qualities of an entrepreneur? I'd say an entrepreneur is someone who is constantly evolving towards increasing opportunities, someone who's seeing opportunities where other people might not necessarily see them, someone who has the grit and determination to sort of not just burst through a wall to solve a problem, but find ways to maybe go over the wall or go around the wall, but they're finding a way to their target, right? And that is, obviously all founders need to have resilience and perseverance, but an entrepreneur is one who's also willing to say, wait a second, this wall is like a thick steel wall and we can't break through it, but maybe there's a different opportunity, right? Maybe there's another opportunity that we can find and iterate towards and maybe even make a super hard pivot, right? And that journey of a startup from that fledgling series seed stage to an IPO often comes with some range of soft pivots to very hard pivots. Yeah. And it's real entrepreneurs who can make that journey. And so what I look for very practically is people who do a lot of listening and a lot of curious conversations. So they're not necessarily saying, here's my thesis, here's how it's broken, here's how I'm going to fix it. Say, great, how many teams did you speak to? How many companies did you speak to in this space? And 5, 6. Well, that's not nearly enough. I want to know that you've spoken to 30, 40, 50, and that you have another 7 lined up after this week. And then you're not getting your validation from a bunch of venture capitalists who are saying, that's a cool idea because I've seen a handful of similar businesses, but you're getting your validation from the market. Yeah. And that market's also forcing you, or hopefully encouraging you, to evolve your idea and shape your idea and change it. And so to me, that's a real sign of an entrepreneur. It's that curiosity. It's that also that authenticity to be able to say, to listen and hear, wow, you're not saying what I want to hear. You're actually saying the opposite of what I want to hear. But that's giving me a different idea. Yeah. And if I keep hearing that, maybe I'm going to change and maybe I'm going to shift focus. And so, for better or worse in this market, oftentimes the decision making is so condensed because of the demand for great teams and startups that you don't have that longitudinal experience with founding teams. Yeah. But ideally, I'd get to know somebody 2-3 months before they even begin ideating on their business. So they're finishing their earnout from their previous company. They still have 3 months before they go. And that's, to me, that would be the best because I want to actually see that person's evolution and see their ideas shifting over time. Yeah. And really like someone going out to the market, speaking to the market, getting feedback and building off of that versus vice versa. And that process of ideation is critical. And when we're a part of it, and I don't want to misspeak the numbers, but I'd say over 50% of our investments come at that founding stage. My favorite ones are where we were actually part of that process of ideation. Not that we gave them the idea, and not that we... we would talk to them and ideate and bounce ideas up. Like, what did that look like? They'd come to us and say, hey, we're thinking about something, in the world of, optimization for the GPU layer. Okay, great. Like, go discover what existing solutions are there. And then they come back and say, actually, you know what? The truth is that we think that this whole space is going to get just made obsolete by hardware innovation, or maybe it's going to be made obsolete by just the ability to scale out GPU architectures. Okay, so but we're hearing how they're thinking, we're hearing how they're responding to feedback of the market, and even if they don't come to a very, very concrete idea at the end of that process, but we say, wow, we love the way these people think, and this team kind of works together.
See you guys.
We're gonna lean in and get involved there. And so that to me is my favorite type of investment.
So do you have kind of like key stakeholders in the ecosystem that are plugged in, like in, let's say, like alumni of Shunamatayim or research labs at the universities and things like that, and that's how you then get into those conversations early and find like those, I guess, those key people of influence in those different industries that you can ideate and then build from, or they have their people around them?
It's a bit of everything, to be honest. So I think a lot of it is our existing entrepreneurial, our portfolio of companies that sort of can almost be like our representatives in the market. Sure. We'd like to try to be, and often we are, sort of the first call any of our CEOs will make when dealing with either a crisis or when dealing with something really exciting they want to share. And being able to be that backbone for them means that we have sort of the respect and the trust and hopefully the admiration of the CEOs, and it's vice versa, right? And it's mutual. So I'd say those people play a primary role in sort of being, our feet on the ground in some way. Obviously, we have a junior investment team as well that is proactively reaching out to entrepreneurs all the time. And yeah, we do events and we do sort of partnerships with various alumni networks, or identifying individuals that we think are just fantastic. Maybe they're retired, or maybe they're just angel investors, or maybe they're solo GPs that we just really get along great with, and we try to cultivate a relationship with them. And now that's available to anybody, right? And so it's never really exclusive in any meaningful way. But one of the coolest things that we have done is we launched a platform essentially called Bessemer Concept, which is located just above our offices in Sirona. We don't really publish it. We don't really sort of advertise it or market it broadly, but essentially it's a co-working space for a select group of teams. So we have a space for about 5 or 6 teams of founders, or entrepreneurs, I should say, who are in that stage of ideation. And we don't ask them for equity. We don't ask them for money. We don't give them really much of anything except for that space to work alongside fantastic people. And there's no real direct association with Bessemer, but it's a place to come and work for 2 or 3 months to ideate, so that when you go and talk to the venture capital firms, whether it's us or whether it's others, you have much more maturity to those conversations. Sure. You have much more to backstop, rather than just going to the market and saying, hey, I was one of the first product people at this cyber business, and now I'm going to build my own. It's okay, great, that might work, but let's sharpen the idea a bit more before you have that conversation.
So for the early stage, then, how important does storytelling play in the role of the conversations that you have? Like, because there aren't those tangible things that you can necessarily, not grade them on, but, evaluate them on very early. Like when they're talking about the vision and the problem and the pain point, especially I guess for Israeli founders, where that communication can be very difficult, where that innate storytelling is not the same, like how you have American kids that grow up with it's all about that. So I'm curious your take on that.
It's funny because we're part of a global platform. We our partnership meeting involves the entire global offices, and so we'll have American entrepreneurs present the same way we have the Israelis one present on Zoom to the whole partnership. And very often I'm hearing the American entrepreneurs, and I'm like reacting in such a visceral way of like, this is so salesy, this is so mugzam, like it's so exaggerated, this is so over the top. And the Americans, we'll give feedback to the group on like the founder, the team, and the CEO, and they'll always rate them much higher than I will. And I'll say, wow, like I guess like that's part of the game. Yeah. Right. And it is part of the game. And I think, to answer your question directly, storytelling is essential. And it's not essential to convince us that, okay, this is a great investment. It's actually essential to know, it's really important for me to know that the entrepreneurs can tell the story, because it means they can hire people more effectively, right? That you can convince great employees who have many, many very attractive options to go to come to you and to work with you. So storytelling is essential. That you can tell the story to customers, right? So that they'll be able to sort of understand not just the vision of your product, but the value it has today.
Sure.
And being able to marry those two together. And then also the ability to fundraise in the future as well, right? So one of the things that I'm encountering in the deep tech space specifically is fantastic scientists and technologists who are on the cusp of very interesting breakthroughs. But these things are going to cost a lot of money, right? The capital expenditures to bring these things to market is very different than even AI and software and traditional SaaS. It requires a lot of capital. And so actually storytelling there is a requirement for an entrepreneur, because if you can't tell the story, well, then you can't fundraise the tens of millions or hundreds of millions of dollars required to bring, nuclear fusion to reality. And so there I might even emphasize storytelling a bit more, while also making sure we do diligence on the technology, making sure it's feasible and that this is the team who can actually achieve it. But storytelling is critical, again, not just to convince me to invest. In fact, I'd prefer more of the authentic dialogue.
Sure.
But I want to know that they can tell the story.
Yeah. So I guess touching a bit on AI, everyone's favorite topic. I have a few questions, but to start out, I'm actually curious on your end, how has that changed your due diligence process, if it has? Like, I'm getting messages left and right on LinkedIn of people sending me these, like, AI due diligence platforms where you can, like, put in a pitch deck, like, you upload a pitch deck, and then it'll spit out, like, a score on, if this is an investable company or whatnot. And I'm not sure, like, honestly, what to think about stuff like that. So I'm curious on your end how you see that.
That's I can answer this from a personal preference perspective, and then also where Bessemer's at in our own AI transformation journey.
Yeah.
Which, we see the power of it in our portfolio companies. We see the power of it in the new startups that we're evaluating and the opportunities there. Right now, our level of AI adoption is very much Claude chat-based and sort of MCPs that plug into our various data sources, both internally and externally, which hastens a lot of the data gathering and a lot of the iterative back and forth that I might have looking for files in Dropbox or what have you. And the reason I say that is because we haven't yet fully deployed agentic capabilities across the firm. Now, you don't necessarily need that for diligence, and but I just wanted to give context for how I'm going to answer the question, which is when you're investing at the very early stages, AI can tell you about the thesis and the tailwinds and the market and the competitive landscape, and all that's actually really helpful. But it doesn't tell you about the entrepreneurs and other than the backgrounds and the profiles, but that intangible element of entrepreneurship that is also very unique to each market. For example, in the US, like someone who spent 13 years at Google is a very exciting entrepreneur for many people. But in Israel, if you spent 13 years at Google and haven't really jumped to the startup side yet, there's a real question on whether this person's an entrepreneur, right? Or maybe it's just the right time to found a company. And so teaching AI your preferences and hastening that conversation, that back and forth, is super helpful. But where I find the most value for it is not, hey, spit out an answer, should I invest in this company? But it's having that research dialogue and, encouraging, in our case, Claude, to push back on my thesis and push back on my questions. I like writing, so I don't necessarily have AI write for me, but it's more, here's my writing, where are the holes? What would you ask? Where would you question me? And where I found actually the most value is, let's say if I'm exploring a new area of energy or electricity in the data center. So I've created a project on Claude, which is sort of my energy roadmap. And in there, I'm having all my discussions around the energy related entrepreneurs that I'm meeting. And I'm able to ask, hey, compare this to those 3 other companies, or which of these is the least, hardware heavy, or which one has the most science risk associated with it. And then having that work with me to evolve my thinking on this roadmap and where I think the best opportunities actually will be, whether it's software first, hardware first, whether the customer is a data center or the customer is an enterprise. And so that's where I find a lot of value. But as a black box and having it spit out an answer, I think that's maybe fantastic for public markets investing. I still don't know. But I think at the very early stage, it's almost irrelevant.
Yeah, I mean, it makes sense, and I think I just
maybe I'm just saying that to myself. Sorry to cut you off. Maybe I'm saying that so that wishful thinking that I won't be replaced by AI in 2 years. But
no, but it makes sense though, and that's why I keep saying, like, I keep seeing. I don't know. I saw a post on LinkedIn. It was like, all the materials someone's going to make is going to be AI. They're going to put that into an AI, which is then going to spit out more AI, which is then going to evaluate the AI. So you're no longer even talking to a human. You're no longer, but in terms of allowing it to accelerate your thinking and allow you to go deeper, so then you can evaluate the companies even more and like go into a deal with a deeper understanding. I think it's like, that's invaluable for sure.
Totally. One of the hacks that I've often doing when I'm, let's say, on a Zoom meeting, is that I'm writing my notes live into Claude, and maybe I'm like exposing myself here, but I'm writing my notes live into Claude, and in real time I'll say like, hey, what are some questions to follow up on here, or does this actually sound feasible? Is that actually possible, or hasn't this been done before? Right? And so when I ask those questions in real time, it allows me to sort of shape the conversation with the entrepreneur a little bit. Now, again, it's really about the dialogue with the person in front of you, as opposed to what the AI is telling me. But it kind of can help me inform, not to sound smarter in the room, but to actually, probe into the most important areas that maybe would take me a couple of days of research to discover, and now it's within seconds or minutes. Yeah.
So then also another area is like AI wrappers and how that's affecting VC. And so I'm there. I have a few questions around this, but I think first, I also keep seeing on, maybe I have to spend less time on LinkedIn, but I saw a statistic somewhere. I don't remember the exact statistic, but it was a fund that said that a certain percentage of companies that came to them, like let's say inbound, were actually just AI wrappers, and there was nothing behind that. And on one hand, like I see like that could be something that's amazing because it decreases the barrier to entry, and anyone can start something that at the end of the day could make money. Like you could easily put on an AI wrapper, market it, and make money off of something and sell. But it's also, it can be a disadvantage or something that's scary, I think, on the investor side of things, because then what are you actually investing in? Can this just be, you might think something could be, revolutionary, and then in 2 seconds it can actually be replaced. So it's this balance of figuring out, okay, what are the advantages versus disadvantages of this?
Yeah, and I'm sure if you ask those companies that have been labeled AI wrappers, are you an AI wrapper? They'll say, no, we're not an AI wrapper. And
we have a proprietary AI technology.
And we have a data flywheel, and that data becomes the moat, so that our AI will always remain, 2 or 3 steps ahead of the most, innovative foundation models that come out. But it's a real question for VCs. It's also a real question for entrepreneurs, because if your product, and you have to look at yourself in the mirror and essentially ask yourself, like, is this really defensible? And by the way, if it's not, it doesn't mean you don't have a great business on your hands. It just means that maybe the go big or go home path of raising venture capital and scaling super fast, because that will give you sticking power and positive net revenue retention in the long run, sort of that grows upon itself, that compounds. That may not be true if it's a true AI wrapper, which can be easily replicated and easily competed against by a host of other people. So I think the question really comes down to how you choose to finance that business as an entrepreneur. And for VCs, understanding what the risk profile is, or what the outcome profile is for some of these businesses that really might be an AI wrapper. Now,
how do you identify that?
It's a lot of probing the entrepreneurs and asking, okay, so what really is the moat? And in 5 years, for example, why should, if you look at traditional software, there were leaders who became the dominant players in their respective markets. Look at Toast in the restaurant world, or Procore in construction. The number twos there are less than 10% of the ecosystem, while those number one players are probably over 50%, if I'm not mistaken. That's because software was really hard to build. And if you built it and you had those features, it was much more difficult for upstarts to catch up to you. Now, the barrier to entry has been lowered. The ability to catch up potentially is much higher. And so in 5 years, one of the questions I've been asking lately is, in 5 or 10 years, are you the only player doing this? Like, is there a reason there won't be many others? Like, oh, we're not going to be the only player, but we're going to be, the biggest. Like, great, okay, but let's figure out what that looks like on the exit multiple, and let's figure out how private equity firms might evaluate that, and what your churn dynamics will look like then. So it's an ongoing conversation. It's funny, if you asked me 6 months ago, I would have said my 2 main areas of interest are AI infrastructure and vertical AI. As the evolution of vertical SaaS, where Bessemer's played a huge part, we have a right to win in vertical AI, and we still do. And I'm not what's the word? I'm not negating any vertical AI businesses. I'm actually meeting with almost all the players here in Israel, but understanding the right, not just the right to win in the short term, but the right to be sticky in the long term, which is why vertical SaaS was so valuable. And B, what is that defensibility, not just from upstarts, but also from the model companies themselves, right? And a lot of people are talking about the new features that that Anthropic are releasing that have more vertical orientations and how that affects those markets. And on the one hand, one could say, okay, these better models are tailwinds for the vertical AI companies that know how to use those models. Yeah. On the other hand, maybe it also just continues to siphon off the low end of the market, or the long tail, or maybe the largest customers who say, we want to own more of this ourselves rather than outsourcing to a vertical AI business. Yeah. And so I don't have a clear answer for you on how to identify that, but I'd say that answer needs to be very, very convincing. I'd say one of the most convincing answers is when it's a real technological hurdle that requires focus. And so, for example, I have a portfolio company called Set in the gaming industry, which is vertical AI for the creation of interactive playable advertisements and video ads, which is basically the heart and the beating heart of the entire mobile gaming industry. And for a while, I was a little nervous. Nano Banana looks really cool, and I could prompt and make a great video. Yeah. But you don't realize is tying back creative videos to performance in live testing environments, live audiences, is not something that you can easily set up on your own. And B, playable advertisements is a very serious technological challenge, which if you're not exclusively focused on, it's very hard to do. Sure. And so could Anthropic deliver a playable ad model if they focused on it? Maybe. But Set has a massive head start and is developing some of their own proprietary technology, to your point earlier, where I actually have very high conviction that this is not something that's easily replicated, nor easily tailored by just taking different agentic workflows together. And so I'm more and more convinced of that sticking power, where you have both the technological innovation and the data flywheel that does actually protect them. Yeah,
because my next question was going to be then, how are you seeing, if anything, like for even your portfolio companies, of like even the potential valuations in the future could shift because of what's coming? And it's almost like, for example, like what was it this past weekend, maybe a few weeks ago, Google launched their own version of Whoop, and then boom, Whoop is gone. Like, so I'm just curious, like how do you guys think through that, or even for other funds as well, evaluating how different players can change very quick? But I guess that's also the risk in the VC game.
It's a risk. It's very difficult. When we were investing, and we continue to invest in cloud infrastructure, one of the big questions we had was, well, what if Amazon just offers this as part of AWS, or what if it just becomes part of Azure? And you saw it happen sometimes, but not very often. Here, though, again, the issue is that you can deliver these products much faster than before. Sure. And so it takes far less resources to deliver a comparable offering to a smaller startup. Again, I think it's just an ongoing conversation that we ourselves are not sure of. And we do think there is some level of escape velocity for the customers that can move fastest, sort of build the brand recognition and trust in their ecosystems, where sure, like I can hack together my own thing based on the foundation model and some IT work on top, but ultimately then I'm going to need to maintain it, and then I'm going to need to be the one to deliver the new features that I want to deliver, and I'd rather just pay someone else to handle all of that. And that's true. That remains true, and we don't really see the churn that everyone's hyping about.
Yeah, that they would think.
Even if you look at some of the companies that have been, destroyed in the public markets by each new Claude or OpenAI announcement, you're not seeing that in the metrics too much, if at all, for some of them.
Yeah, because I mean, for someone, it's like the dilemma of like using HubSpot versus building your own CRM. Like, okay, if someone's in needs to build, like, is the time that they would take to try to build their own CRM. I mean, that might be a bad example because it might be pretty easy, but like versus you're paying a subscription and you have it there and all the features are set up and everything's integrated and it's very seamless versus spending the time to do it yourself.
Right. And so I think that I agree with you, which means the challenge is not the decision of buy versus build on my own.
Yeah.
The challenge is going to be, I could buy this AI CRM or buy that AI CRM or these other 15 AI CRMs.
Because it's so easy to build them.
And why is one better than the other?
Yeah.
And so I'm personally less worried about the whole, I'm going to build it myself.
Yeah.
And more worried about this, again, what we said before, is like the sticking power of what used to be like, the compounding effect of software just doesn't seem to be there.
Yeah. So then are you looking more at hardware then? Like, is that
deeper down the stack, I would say. Or on the other side, I think also consumer plays are very interesting.
Because I mean, I remember a day when everyone was like, stay away from hardware, CapEx is way too high. And now it's like, well, that's actually...
Hardware is hard and CapEx remains very, very high, right?
For sure.
There's not a change. But what there is a change is that there's new customers now.
Mm-hmm.
Where all of a sudden, if you were building batteries, it's like, okay, so there's like government customers and there's some energy related businesses, and maybe you're starting to see electric vehicles, but maybe they're all vertically integrated. So how does a third party battery company sort of serve them? Mm-hmm. How scalable are these things? But you're seeing more and more customers. I mean, take, for example, the defense industry. Right. And so you have this whole host of drones and robotics that are being deployed in the field. Actually, today, it's not a pipe dream, but those drones and robots need solutions that are, whether it's the cognitive brains for those robots and drones, or whether it's the energy packs for those robots and drones, where it's not just one big, government buyer or, sleepy defense prime that needs the solution, but every single new startup in defense tech or in robotics does need the orchestration brain of the robot, right? And so you have new customers. I mean, just take energy in the data center, for example. Like if I was building a green energy business, it was a nice to have, or maybe there's some regulatory tailwinds due to sort of legislation or just consumer sentiment, which sort of ebbs and flows in these areas. But now you have a buyer who really cares about their top and bottom line. And if you can give them more energy on demand, or more predictable energy, then they can increase their top line because they could deliver more GPU workloads to their customers. And they can reduce their costs because they're, having less spikes and less, waste and overcapacity or undercapacity. And so there's a new buyer who's commercially driven and not driven by the sort of the nice to haves that we've seen. And so hardware remains hard, but there's new dynamics at play in the market that means like the time to market might be a little easier. The showing value to customers who are willing to pay a lot is going to be a lot more feasible. Yeah.
Okay, amazing. Shifting gears for a minute, I've been doing a series called Fundraising Lessons That Founders Learn Too Late. Posting pretty much a video every day for the next 30 days. So I would love to hear a lesson from your perspective that you would want founders to know and understand, or a misconception that they sometimes think when raising VC?
I love that question. It might be overly specific to a fund like Bessemer, where we have like multiple partners, not just in Israel but around the globe. But we share information, right? And so we talk with one another. And so if you've met my partners in the US or happen to meet one of my partners in Israel, and sort of get another intro to me or to another colleague, and sort of don't address that, it's kind of off. You sort of think, okay, so you maybe got to know, even if it was 6 months ago, but like, why are you not addressing that up front? Because I'm going to look at my CRM, I'm going to see that, wait a second, my partner passed on this Series A round 2 months ago. Why am I talking about it again? And by the way, maybe I am interested in it, but having that like just honest upfront conversation is really, really helpful. And another thing is to me, this is like a big pet peeve of mine, but overly stating your commercial progress when you have 10 customers that say they want to be design partners, but you haven't actually formalized anything with them yet, and calling them design partners, to me, that's a red flag, right? And yeah. I'm gonna speak to them with your permission, or afterwards, like, get references. And if they say, oh yeah, it's interesting, we might want to work with them in 6 months, and if there's like a disparity, a gap in between your view of reality and what actually is happening, that's, like, to me, like a negative signal on this entrepreneur's ability to be intellectually honest and know what they're actually dealing with and what's in front of them.
What do you think is the best way for founders to keep you updated? Like, even if you did pass on them initially, has there been a situation where you've passed and then you've come back?
Totally. One of my favorites is a company called Quack, which is very dear to my heart. It's one of my personal first investments, and thankfully a quick exit in about 18 months. And we looked at the seed round. It was shared with us by a seed fund that we love to work with here. And they said, hey, we did half the round. Are you guys interested in getting involved? And we did extensive diligence. I mean, like, maybe 3-4 weeks of conversations and getting to know the entrepreneurs. And I came to a difficult decision and said no. And I explained my reasoning, which I thought they appreciated, and they did appreciate, because a couple years later, the founder came back to me and said, I look back at your email when you passed, and as we sort of check the boxes or deal with some of the concerns that you outlined, he's like, first, A, I was very grateful that you were honest, and B, it was really helpful for us as we sort of shape the story leading up to the Series A or the next round that we ended up leading. And so Alon, the CEO, came back 2 years later after he passed on the seed and said, we'd love for you to take a look at this preemptive round. And I did it. And that to me is like, that's the arc. That's the journey that I love, that I'm here for. Investing in entrepreneurs in the early stages is so interpersonal. It's so relational. You're setting out for what usually is a much longer journey than 18 months, but you really want to have trust and partnership with the entrepreneurs. And that comes from honest conversations. And that comes from being direct, and it comes from being authentic. And I think I'm of the firm belief that pays off in the long run, whether I end up working with that company or not, or whether they send me their friends because they just like the conversation. But to me, that's like the most satisfying arc in an investment. So you would say if you were to pass on a company, should they follow up with you every 3 months, 6 months? What does that cadence usually look like? I'd say like every 6 months it depends on the space, because some of these spaces are moving so fast that in 6 months you may have raised another 2 rounds, and I'd say, oh man, why didn't you reach out earlier? Depends on the pace at which things are moving, but I'd say general updates every 6 months are really welcome. Maybe it's an email. It doesn't always need to be a meeting. And I know founders want to tell the story and they want to have the shot at the pitch, but like being also aware of your own time and saying, hey, Ariel, would love to sit, whenever you have a chance, but just FYI, here's the main updates on the business. We just want to keep you posted. Or B, if there's something that's super relevant to me, like, hey, actually just wanted to let you know we started working with your portfolio company, Converge Bio, because we are, a pharmaceutical biotech company. Yeah. That's interesting for me to hear, right? It's like, oh, cool. And you remembered something very specific and sort of very personal that you're able to close the loop with. So those types of updates, I love hearing them. And this country functions on WhatsApp. It functions on just sort of clear, fast communication. And so it doesn't always need to be a meeting. I mean, I think that I love good updates. Amazing. So I guess before we wrap up, do you have any pieces of advice for any of the founders that would be listening? Surround yourself with people who are willing to tell you the truth, and not just cheerleaders. But whether it's your teammates on the founding team or employees who also, I don't think Israelis have this challenge too much of like sharing your opinion, but also your VCs who are willing to say, not in a harsh way, not in a way like you're terrible, there's some being honest and direct, and sort of that's really valuable. So surrounding yourselves with those people, and be willing to revisit your assumptions every so often. Some of my companies, especially the ones that I invested in pre-ChatGPT moment or pre-Claude, and everything changed in December when the latest versions of Claude came out. And I say to them, if you were to found the company today, same market, same thesis, like what would you do differently? What products would you have not built? What would you build now? Where would you focus? And that exercise might lead to an insane pivot, but more often than not, just leads to much more prioritization and focus, and knowing on what I'm actively saying no to at the, you know, for the benefit of the things that I am focused on.
Yeah.
And so revisiting those assumptions and saying, okay, well, the world has changed and I'm continuing to, you know, momentum has been going in this direction, but let's pause for just a few minutes or days and just completely go back to the drawing board. Well, even if nothing comes out of it, I think that's a valuable exercise. For sure.
Awesome. Any last thoughts or anything you want to share?
No, I'm super grateful that you had me here. So thank you. It's a lot of fun. And hopefully we just continue to see this awesome ecosystem and country continue to blossom. Amazing. For sure. 100%. Well, thank you, Ariel. It's been awesome having you on. And I guess if anyone, how could people get in touch with you? Best is email. Truth is, I'm like I said before, the country functions on WhatsApp, but I really don't. And my WhatsApp inbox, you can probably attest to this, is a mess. But email is best. And and getting in front through the right people is obviously even more welcome, but happy to answer eventually. Awesome. Thank you so much.